Alright, so today is June 2nd. It is the same day that I made the first video. This one's going to be on market structure and just explaining market structure. These first couple videos, I'm gonna try to keep them short and sweet since they're easier concepts to understand and they're not that difficult to kind of grasp. I'm gonna try to keep these videos as raw as possible. And I have, obviously, if you see me look to my left, I have all of the stuff I want to talk about today on there. But today's going to be specifically market structure, talking about uptrends and downtrends and things like that. Um, and I'm just going to kind of talk about it like it's from ground zero, like that you have no idea what any of this stuff is. Even though if you do, then obviously you're going to want to skip ahead and not worry about this kind of stuff. But your typical downtrend is going to be something like this, consisting of lower highs and lower lows. So this is a lower low, lower low, lower high, lower high. And then your uptrends are going to look something like this. They're going to be higher highs, higher low, higher high, higher low. And obviously higher low, higher low, higher high, higher high. So it's just vice versa, flipping each other. And these are actually really easy to kind of grasp. They're not that difficult of a concept in trading. I'm going to show you some of them on different time frames. And this kind of helps when you're trying to do market and your market analysis, your technical analysis before market opens. So it's something that I do every day. I'll zoom up on time frames and I'll look at them. So for this is June 2nd, so this is the month of June and May roughly on the 1 hour time frame. We're going the daily first. So as you can see, the daily is going to be an uptrend, consisting of your higher highs and higher lows. So higher high, higher low, and then obviously we'll probably put in a higher high, and then we'll probably put in a higher low eventually. This is going to be your pretty interesting example for market trend. As you see, this is an index, so it's going to always kind of go up, but you can easily just note on the daily chart. Here we got higher high, higher low. Then actually trend kind of flipped right here, a little weird. Put in this overall higher low, and then a higher high. So this obviously goes down. So like if I'm setting up for market open, something like that. Say I'm on a 15-minute time frame, right? Oh, sorry. Say I'm on a 15-minute time frame, pre-market, trying to gauge some analysis. Maybe I'm marking out some certain points in liquidity. Obviously, I haven't talked about liquidity or any of that kind of stuff. But if I'm coming into market open, like I can't see this, so we have post-market yesterday, price dumped. So this is probably going to be a downtrend, higher low, higher high, higher low, higher high, higher low, and then trend flipped. So then it went from a higher low to a higher high to a higher low. And obviously going into market open, looking at this uptrend that we're clearly in an uptrend, we're going to be wanting to look for calls or longs off of those positions, specifically longs for me. You don't ever want to fight trend. Trend's always going to be your friend. I know it's kind of corny, but that is a saying, and it really does prove that you don't want to fight trend or try to top tick or bottom tick positions because you're going to get smoked out 9 times out of 10. Same thing goes for downtrends. Obviously, downtrend here into an uptrend, and this is on every time frame. So go on 1 minute. Here we go on the 1 minute. We're in a downtrend, 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 and then trend flips to an uptrend. And obviously your higher time frames tell you what your lower time frames tell you where your higher time frames are going to be going. Things like that. I might have said that backwards. Another thing I want to cover in this video, obviously it's going to be a really, really short video most likely, is going to be your trends versus your ranges. So I know back, I'm on the 1 hour. Let me switch this. Okay. So this is going to be a range where there's no designated trend in price. So this is going to be a range, kind of where price is barcoding is what I was always taught. Let me switch down to more candles. I was always taught price is barcoding. So obviously, if you think of a barcode, all the lines and stuff, but price is just moving sideways. So there's no given trend. This is not something you want to be able to notice when price is ranging compared to when it's trending, because obviously it's going to be easier to take trades. Because if you're trying to say take a short and you see this downtrend, obviously price is ranging. We know that, But a noob or someone who doesn't know very much might try to short this position and then get smoked out because of a range. You kind of want to wait for price to break out of the range, obviously, to therefore go up. Another good example of a range is right here, this right here. So where price has no structure, no format kind of thing. And you're obviously going to want to wait for price to either break below or break above a range. You can obviously trade ranges. That's more of a complex idea comparing to these videos that I'm making. But you can trade ranges. In my personal opinion, starting out, I definitely would not. I'd try to stay away from anything that's ranging in price because it's harder to trade. Trading on a trend is much easier. As you can tell, price breaks below. Obviously, price goes down. Price breaks above. Price goes up. So you can kind of see. They call it accumulation and distribution. So this is going to be your accumulation and then distribution, accumulation, distribution, and there's obviously that concept that accumulation distribution gets way more complex, adding different techniques and things like that. I don't want to bring up anything like that because it's not going to make sense now. I'm going to wait. But this video is just basically market structure, higher highs, higher lows, and then obviously your lower highs, lower lows, and then your trends versus your ranges. If you have any questions, make sure to leave them in the comments. Like I said, I'm gonna try to keep these videos as raw as possible. I don't want to edit them too much because I feel like it's more it's better for people. I always liked raw videos because it shows they're not edited out, especially in trading. Um, but I'm gonna try to keep videos short and simple because I never liked, when I was learning, I never liked the really long videos. So I'm gonna try to keep them nice and short. Other than that, I'll see you guys in the next one.